Why should you choose Malaysia Government Securities? Let me tell you. First of all, market players for Malaysia Government Securities are divided into two, which are Malaysia Government Investment Issue, which is MGII, and non-resident investors. So, we go through for MGII first. It is a debt instrument that comply to the rules of Islamic finance. These instruments also comply with Sharia law, which prohibits charging or paying interest or charging riba. For example, the publisher and the investor will share the profits equally without the element of interest. This is because profit and loss sharing is the return paid representing ownership in assets, namely sukuk. So, customers who want to invest in this company, especially for Muslim, do not to worry about it. Next, second marketplace for MGS is non-resident investors. It is a wide range of institutional investors, including central banks, commercial banks, insurance company, pension funds, retail investors, foreign investors, and investment banks. For commercial banks, they act as intermediaries between the government and investors, and they are also included in the auction process. Next, insurance companies and pension funds are invest in these securities to earn a return on their investment and to match the long-term nature of their liabilities. Furthermore, government securities can also be purchased by retail investors such as private citizens. For example, through banks and other financial intermediaries, they can buy such as government securities. In order to increase non-resident investors, population in Malaysia bond market by supplying crucial liquidity to the secondary market and help to ensure the effectiveness of the market.
The Government of Malaysia issues government securities such as bonds and treasuries to raise funds for various purposes. These securities are issued by the Ministry of Finance and are often sold through auctions. The government security issuance process is managed by the Central Bank and the Ministry of Finance, who are responsible for setting the terms of the securities and managing the auctions. There are 6 main reasons for issuing these securities. The first reason is financing government budget deficit. The government may issue securities to raise funds to cover the gap between its revenue and spending. The next reason is infrastructure development. The government may issue securities to raise funds large-scale infrastructure projects such as building roads, bridges and airports. Then monetary policy. The Central Bank of Malaysia may issue securities to manage the money supply and control inflation. Another reason is debt management. The government may issue securities to refinance existing debt and to manage the maturity profile of its debt. After that is attract foreign investment to the country. Issuing government securities, the government can create an attractive investment opportunity for foreign investors. The last reason is develop a stable and active bond market. A bond market is a financial market where investors can buy and sell bonds, which are debt securities issued by the government, corporation and other organizations.
There are benefits to investing in Malaysia government securities. Firstly is safety. Government securities are among the safest investments since they are issued by the government. Government has the power to collect tax and create money to pay for its obligation. Because of this, it is common to think of government securities as safe investment. It's important to keep in mind that the stability of the government delivering the investment may also have an impact on how safe it is. Next is liquidity. Government securities are very liquid, making it simple to buy and sell them on the secondary market. Since they are easy to purchase and sell on the secondary market, investors may easily start or end a holding in the asset. Finally, the tax benefit. In Malaysia, interest earned on government security is tax-free. Therefore, investors are not required to pay tax on the interest income they get from these securities. Due to this, buying government asset may be a smart decision for those looking to maximize their profit.
Characteristics of Malaysian government securities. Some characteristics of MGS is having a set maturity date and a fixed interest rate. These securities have a fixed maturity date, after which the holder receives their bonds initial principal back. Additionally, they have a set interest rate, which is the portion of the principal sum that the investor will get every month until the maturity date in interest payment. Next, they can be traded on the stock market, just like stocks and other types of securities. This means that when the government issues the bonds, investors can buy and sell them on the secondary market. Moreover, individual investors are not subject to tax on interest income. They are not taxed in Malaysia from holding government securities like bonds. As a result, any interest payment that private investors receive from this asset are not regarded as taxable income. The bonds must, however, be held in individual's name and not the name of any company for this tax exemption to apply. In addition, Malaysian government securities are also viewed as low-risk investment opportunities. They are regarded as low-risk investment options due to the fact that these assets are backed by the government's full faith and credit, which makes them less likely to default on their obligations. And last but not least, they are regarded as liquid investments since the secondary market make it simple to buy and sell them. Investors can easily buy or sell government assets at any moment because of the market's constant activity and development.
I would like to explain about the tenor Malaysia government security. First of all, tenor refers to the length of time until a bond matures and reaches its full face value. Malaysia government security are issued with various tenor, including short term, typically less than 1 year, medium term, 1 until 5 years, and long term greater than 5 years. For short term Malaysia government security, such as the Malaysia Government Investment Certificate (GIC), GIC are issued with maturity of 3 months to 12 months. They offer low risk and fixed return. Next, medium term Malaysia government security such as the Malaysia Treasury Bill are issued with maturity of 1 to 5 years. They are also low risk and offer fixed returns, but with slightly high return than short term. Last but not least, long term Malaysia government security such as the Malaysia Government Security MGS and the Malaysia Government Islamic Security MGSI are issued with maturity greater than 5 years. They offer relatively higher return than short-term and medium-term Malaysia Government Security, but also carry a higher level of risk. That's all. Thank you.
In conclusion, Malaysia Government Securities, which is MGS, are debt securities issued by the Government of Malaysia to raise funds for the country's development projects. They are considered a low-risk investment as they are backed by the full faith and credit of the government and are widely held by domestic and foreign investors. MGS are considered to be a safe and liquid investment option with a relatively stable return, making them suitable for investors who are looking for a low-risk investment. The Government of Malaysia also uses the proceeds from the sale of MGS to finance its budget deficit and to manage its debt level. Overall, MGS are a stable and secure investment option for those who are looking for a low-risk investment with a relatively stable return. If given an example, an investor could purchase a 5-year MGS bond with a face value of 10,000 ringgit and a coupon rate of 3%. The investor would receive a regular interest payment of 300 per year of the duration of the bond, and the 10,000 face value would be returned to investor at the end of the bond maturity. This investment option would offer a predictable stream of income and low-risk investment option for the investor as the bond is backed by the Government of Malaysia.